New listings in the GTA just dropped nearly 19% year over year. That's 19%. Meanwhile, sales are still going up. If you've been waiting for the right moment to understand what's actually happening in this market, this is the video. I'm going to walk you through the May 2026 TREB numbers from the GTA down to Toronto. And by the end, you'll know exactly what it means for buyers and sellers right now. Let's start why the full Greater Toronto area, all TREB areas combined. So May 2026 saw 6,583 sales across the GTA. That's up 6.3% compared to May 2025. When we had 6195. So buyers are more active than they were a year ago. That's consistent with what we saw in April, and it tells you that confidence might be returning. But the story that matters most this month is on the supply side, and this is where it gets really interesting. New listings dropped 18.9% year over year. We went from 21,830 new listings in May 2025 to just under 17,700 this May. Now, that's not a rounding error. That's nearly 4,200 fewer homes coming to market in a single month. And total active listings are down 13.3%, sitting at 26,927 compared to over 31,000 a year ago. Now, let me put that in plain terms for everybody. Buyers are showing up in greater numbers and sellers are showing up in far fewer numbers. That is the definition of a tightening market. I'm not saying that this is a recovery, but this is kind of what the data is saying. Now, the average price hasn't caught up to that dynamic yet. The GTA average came in at $1,069,700, down 4.6% from May 2025. On the MLS price house price index, which strips out the mix shift effect, let's say, the composite benchmark is at 946,500, which is down 6.7% year over year. Now, here's what's worth paying attention to though. Month over month on a seasonally adjusted basis, the average selling price actually nudged up slightly from April. It's not dramatic, but the direction it seems to be changing. Now, TREB's own chief economist put it plainly in their release. If sales continue to strengthen relative to listings, pricings will level off and start to grow as we move into 2027. Now, I'm not sure if I buy that just yet. I'm not sure if this is just a little blip, but that's their forecast. It's not mine. But the data they're pointing at is kind of right there in front of us. Now, let's look at how different property types are performing, because the story is very different depending on what you're buying or selling. Now, detached homes led the way in May with 3,236 sales across the GTA. That's up 9% year over year. That's the strongest volume growth of any of the categories. The average price was $1,358,000, down 4.7% from last year. Detached buyers are active and detached sellers are dealing with a more reasonable pricing environment than we've seen in a couple of years. Semi-detached, the volume here was essentially flat, down less than 1% at 608 sales. The average price is just over $1,067,000, which is off only about 2.9% year over year. Semi-detached is actually the most price resilient category in the GTA right now, which is worth noting if you own one. Townhomes, there were 663 sales, up 4.8% in volume. The average price was actually down 7.1% at $916,474. The townhouse segment has the most price pressure right now, but also a lot of buyer activity, particularly in the 905. Condos, there were 1,535 sales, which is up 4.2% year over year. Average price just under $640,000, which is down 6.4%. Condos are still obviously the most challenged segment on pricing. The supply in that space is obviously significant, especially in the 416. But the fact that volume is up 4.2% shows that buyers are willing to transact when the price is right. The bigger picture here, every property type is seeing more transactions year over year. The demand is there. Pricing is adjusted. What happens to prices from here depends almost entirely on whether that supply crunch we're seeing continues through the summer months. Inside the city of Toronto specifically, there were 2,377 sales in May. Average price over 1.1 million. New listings at 6,400, active listings 9,900, average days on the market 26 days, to first listing 40 days, total property days on market. So that would include if they're relisted. The city is running, I would say, hotter than the broader GTA in terms of the supply-demand imbalance. New listings in the 416 have been falling faster than in the 905. And you can see that in the data. The sales to new listings ratio for Toronto West is already hitting 39%, meaning for every 100 new listings, about 39 are selling within that month. Toronto East is running even hotter with a sales to new listing ratio of 40%. Now, average prices in the city by home type. Detached is sitting at just over 1.6. Semi-detached, just under 1.3. Townhomes, kind of just over 1.1. And condos at 673,000. Now, I want to flag one specific signal in the condo data inside the 416. Condo apartments are still soft. Prices are down, I would say, meaningful amounts year over year in most of the districts, but volume is holding up, which means buyers are engaged when pricing is realistic. And that's kind of, I would almost say that's across the board. Like, I had a number of listings where we priced it properly and we had a lot of activity and sold it very quickly. So now they weren't necessarily condos, but I just feel like it does, that specific requirement kind of casts across all home types. You need to be priced properly. If you're a condo seller, this isn't time to like anchor yourself to 2022 prices. If you're a condo buyer, your leverage is real, but I don't think it's going to last forever, but for now, I think you're in pretty good standing. So that's the May 2026 TREB Market Watch breakdown. Again, GTA sales up, supply down sharply, and prices stabilizing. City of Toronto, same story, kind of accelerated. CO4, tight market, fast days on market, and the only area in the city where the HPI benchmark is essentially flat year over year. I'm Anthony Malfara, broker with Royal LePage Signature and co-team lead of the Property Boys. Numbers in the description. If this was useful, subscribe. I do this every month. See you in June.